Welcome to weekly view on markets. Markets have kept up the momentum of previous week, and indices have closed at the record highs or almost near the record highs. Broader markets represented by mid cap and small cap sectors have outperformed during this week, and they also closed at record highs. The scare that was created in the month of March about the mid and small cap sectors have almost vanished, and they have come back just within a month to the record high levels. This is the end of financial year, and companies will be declaring their fourth quarter results. Before that, they have given business updates for the fourth quarter, and they indicate strong earning season for the fourth quarters. And markets are factoring in those earnings. That is why we are seeing a bounce back in the markets. Charts look healthy. Technical indicators show more upside in the coming weeks. When everything looks good in the market, that is the time investors need to be little cautious. And also, we have seen phenomenal returns from the market in the last financial year. But investors have to be realistic about the return expectations from the market. Otherwise, they will be highly disappointed. Markets cannot keep on giving 30-40% returns every year. So in one year, if there is very high returns, the market tends to return to the mean. The mean is around 14 to 15% return per year. So that is what investors should be happy to get from the markets. Now let us look at indices level for this week. Nifty has closed at 22,513. It is one of the highest closing levels. Has gained 186 points. That is 0.84%. Bank Nifty has closed at 48,493. Has gained about 1,368 points. That is 2.90%. Bank Nifty has given a very good gains during this week on the back of MPC committee meeting of RBI. The growth projections and the inflation projections given by MPC committee meeting has boosted banking stocks, and Bank Nifty has scaled above 48,000 levels. Mid cap index closed at 50,022. So it has crossed a landmark level of 50,000. It has gained about 1,947 points. That is more than 4%. And small cap index has gained more than 7% during this week. It has also closed almost near the highs of 16,355 levels. India VIX, that is the volatility index, has cooled down. It is at 11.33. So let us look at sectoral performance. Most of the sectors have gained during this week. Media, metals, PSU banks, realty, PSC stocks, that is public sector stocks, consumer durables, private banks, commodities, all gained about 2 to 6%. NBFCs, energy, information technology, auto, all gained around 1%. FMCG was the only sector slightly saw negative, that is 0.85% negative return for the week. So there is broad-based buying in all sectors, and market looks all set to go to the higher levels. This is the daily chart of Nifty index. As we can see, it is progressively going upwards in this channel, which I had drawn about 3 4 weeks back. So market is taking supports at the lower levels and then trying to move. So now it is heading towards the record highs. And if I extend this line, it may go at around 23,000 levels. So at that level, market will see some kind of resistance. This is a chart of Nifty Mid Cap Index. Mid Cap Index is record highs, and as we can see, it has cleared this congestion zone. This is the congestion zone. So it is a technically very good indicator that this congestion zone has been cleared, because whenever mid-cap index was touching these levels, we used to see selling pressure and it was coming back. So now it has crossed this level. So we can see more upside in the mid-cap index in the coming weeks. This is a chart of Nifty small cap index. Here we can see this is the congestion zone for a small cap index, and it is just at the upper band of this congestion zone. So we'll have to see whether it will spend some more time around these levels of 16,000 to 16,300 levels. If it crosses 16,500 levels, then technically it is set to cross this earlier level of 16,600, and we may see record levels in the Nifty small cap index. This is a chart of Bank Nifty index. I had told in my earlier weeks, if this wedge formation and completed, because it was the range was getting smaller and smaller within this, and now it has crossed. You can see a big green candle. So it has crossed with lot of strength from this wedge. So we can expect Bank Nifty to go to 50,000 levels. Now let us look at some of the fundamental factors of the economy and the market. This week highlight was the MPC meeting of RBI, that is the bi-monthly policy committee meeting. RBI has not raised interest rates, and they have given forecast of GDP for current financial year at 7.6% and for the next financial year at 7%, which looks quite impressive if we are able to achieve these. And inflation figure for current financial year is at 5.4%, and next financial year it is expected to come down to 4.5%. So a lower inflation and a good GDP figures is quite good for the markets. That is why we see a lot of buoyancy in the markets. RBI forex reserves is at record level of 645 billion. RBI governor has made a special mention during the policy statement announcement about the comfortable position of RBI forex reserves. So that is why on Friday, after the policy announcement, we have seen a good up move in the financial sector. Rupee dollar rate is at 83.30. Dollar index is at 104.29. So why rupee is weakening is because of the globally the dollar demand is very high. The dollar it is indicated by the dollar index. The dollar index from around 102 level, it has gone to 104.29. That is why we have seen rupee sliding from around 82.5 to 83.30. It had touched the 83.40 also. So there is nothing wrong with the Indian economy as such, but due to the global demand for dollars, the rupee is depreciating. Brent crude price is at 90.16 and it touches 91. This I have been stating in my earlier weeks also. The crude price, if it crosses 90 and remains above $90 per barrel, it is not good for Indian economy, and which will result in a inflationary trend in the economy, because our import bills will go up. We are importing around 80% of the crude requirement. So that is why higher crude price is a red flag for our economy and the markets. I am surprised by the strength in the gold prices. In just 2 months, gold prices have moved up from around 62, 63,000 to almost crossing 70, 71,000. It is at 72,840 for 10 grams 24 carat. So this is a surprise move in gold. So I am also not able to understand what is the underlying factor creating such a huge upsurge for the gold prices. But one thing, one should not get carried away by the short-term increase in the gold price. I have analyzed gold prices for over last 100 years. Gold is a commodity, and commodity prices are inflation adjusted. Of course, it is not uniform movement. That is why we see price surges now and then. But the gold returns are around 8.2 to 8.3 over a long period of time. And I am not advocating timing the markets and getting into the profits in the prices. If you look at gold as an asset class, you should be happy with long-term average return of around 8 to 8.2 or 8.3%. FIIs have sold around 3,835 crores during this week, and DIIs on certain days they have bought and certain days they have sold. There is a net 1 crore selling in equity by DIIs. Markets will look forward for fourth quarter earnings. Companies' business updates are good, indicating for a strong earnings season. We can look at stock specific movement due to the result of the companies. Services PMI data has come at 16-year high. It is a record level of 61.8, which indicates that the service sector is doing very well in the economy. And as a stock picker, you can look at investing in sectors like tourism, transportation, logistics, where more of services are involved. And also, investors can look at mutual funds which are oriented towards the service sector. This is a sector which is growing rapidly, and definitely, we can get good returns by investing in these sectors. So, if there is any correction, it will be for a short period, and it will provide a buying opportunity. I had told same thing about mid and small cap earlier month when there was correction, and just within 1 month they have bounced back and given a return of around 10% from the lows. So any correction will give a good opportunity for investors to buy. They should believe in the strength of Indian economy, and they should use these corrections to buy good stocks. And mutual fund investors continue, they should continue with their SIPs. They should not get worried about the volatility. So I am stressing almost every week for the mutual fund investors to remain invested and not to get worried about the small short-term volatility. They should be focused on their goals, and they will get good returns from the market in the long term. So this is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can ask your questions. We'll meet next week again. Thank you.